Take a look at this jerk. His name is Bill Hwang, and if you lost money in the market on Friday or Monday, he's likely the one to blame. You see, Bill's a former protege of hedge fund legend Julian Robertson and one of these so-called Tiger Cubs who went on to set up his own shop back in 2013. He formed a family office hedge fund called Archegos Capital Management that manages around $15 billion. Now, most of these hedge funds charge a 220 fee structure, meaning 2% management fee plus 20% of the profits. So you can imagine 2% on $15 billion plus the profits was earning Bill a pretty handsome income. But like many on Wall Street, it wasn't enough. He got greedy and levered up. In fact, this fund, with its $15 billion under management, owned over $80 billion worth of stock. In other words, they were leveraged 5-1. Now, if stocks continue to go higher, you make a handsome return. However, when things turn south, it gets ugly real quick, and that's just what happened last week. As several of these positions turned south, a margin call was issued to the hedge fund, which could not be met. So when Bill failed to come up with the cash, his prime brokers began force liquidating his positions. This led to enormous losses in the market for some of the largest blue chips out there. Let's take a look at these charts. Talking about stocks like Baidu, the $50 billion giant, as you see here, fell in just 2 days from 260 all the way down to 180. It's about $15 billion in market cap, wiped out of the market in just 2 days. It was like this for several other stocks. Large positions include VIP Shop, which fell from $45 all the way down to $25. Shopify was another concentrated position he owned, which took a decent little hit from $1,180 down here to $1,000. Again, about $15 to $20 billion in value wiped out of the market. Tencent Music, another of his large positions. Look at this, was at $32 in 3 days, fell down to $16, cut in half. And it's like this across the board. So it shows you very quickly how fragile this market can be and how large some of these funds can get. And when they're forced to dump their shares, we can see some significant moves in the market. Now, those has created some temporary pain for shareholders. It's also created some monster opportunities for us. In fact, I've just issued 2 new buy alerts for Precision Volume Alerts members on stocks that took big dumps following this forced liquidation and are now at prime buy points. In addition, I've recommended call options along with these that are primed to make several 100% on the rebound back higher. And I want to tell you all about these. So click the link below this video, watch the on-demand training. I'll tell you the ins and outs of my volume alert service, why I think it's the only indicator you need. I'll tell you all about the secret volume roadmap that shows you exactly where large institutions and hedge funds are buying and selling these stocks to identify these precise areas to buy and sell to lower your risk, increase your returns, and hopefully generate above average returns in the market. So go ahead right now, click that link in the video, join Precision Volume Alerts. I'll tell you all about these 2 positions as well as the others we're on right now, and I look forward to working together.